A search for customer support led to a phone number, then turned into a scam that moved money directly out of bank accounts. The number appeared on search results, ads, or forums, presented as official support for banks, airlines, or tech services. Calls connected quickly, with agents using professional language and structured troubleshooting steps. The issue sounded real: a blocked account, a failed transaction, or urgent verification required. Victims were guided through steps that felt like normal support procedures, including logging in to accounts. Then came instructions to secure funds or verify transactions through bank transfers. Some moved thousands, believing they were protecting their accounts or resolving an issue. What looked like customer support was actually a system designed to redirect money in real time. By the early 2020s, fake customer support scams had expanded globally alongside the way people searched for help online. These scams were often run by organized groups, placing fake support numbers in search results, ads, and discussion forums. Victims, searching for help with banks, airlines, or software, were redirected to these numbers without realizing they were not official. The callers answered quickly, using structured scripts and professional language to simulate real support interactions. Targets included everyday users, business owners, and even experienced individuals who relied on quick online solutions. In many cases, the scam combined elements of impersonation and technical support to increase credibility. Reports from agencies including the OAIC and the FTC showed growing losses linked to fake support scams. Financial losses ranged from a few $100s to tens of thousands per incident. By the time victims connected with the number, the scam environment was already designed to feel legitimate and controlled. The interaction usually followed a structured support flow, starting with identity verification and a description of the issue. Callers asked for basic details, then guided the conversation toward account access or transaction review. The tone remained calm and professional, reinforcing the belief that the situation was being handled correctly. In some cases, victims were transferred between departments, creating the impression of a real organization. Once trust was established, the issue was escalated, often described as a security risk or failed transaction requiring immediate action. Victims were instructed to log in to their bank or payment account while staying on the call. The process was framed as a controlled verification or protection step, rather than a financial transaction. Because the steps mirrored real support interactions, there was little reason to question them. By the time instructions became specific, the victim was already following the process without hesitation. Once the victim was engaged, the scam moved into execution, where instructions directly influenced financial actions. They were told to initiate transfers described as reversals, refunds, or secure holding steps. In some cases, scammers provided exact account details, presenting them as official or temporary verification accounts. Victims were guided step by step through the transfer process, often while remaining on the call. The language used avoided direct references to sending money, instead framing actions as system corrections or protections. Some were asked to confirm transaction codes or authorize payments they believed were part of the resolution process. Because everything occurred within real banking systems, the activity appeared legitimate. Behind the scenes, The destination accounts were controlled by the scam network, and funds were moved immediately. By the end of this stage, money had already been transferred, even though the victim believed the issue was being resolved. As the call continued, scammers reinforced the process by introducing additional steps that appeared necessary to complete the resolution. Victims were told that the initial transfer was only part of the process and that further actions were required to fully secure the account. In some cases, multiple transactions were requested, each one framed as a continuation of the same support procedure. If hesitation appeared, the caller provided technical explanations or introduced another specialist to maintain authority. The conversation was controlled carefully, preventing the victim from pausing or seeking outside verification. Reports showed that some victims remained on calls for extended periods, completing several transactions in sequence. Behind the scenes, funds were quickly dispersed across multiple accounts to reduce traceability. Across countries, agencies like the OAIC and the FTC documented similar patterns. By this stage, the interaction still felt like a support session, even though financial loss had already occurred. Doubts usually surfaced when the issue remained unresolved despite multiple completed steps and transfers. Victims checked their accounts and noticed that funds had been deducted without any corresponding reversal or protection. Attempts to reconnect with the same support number often failed or led to inconsistent responses. Some contacted the official company directly and discovered that no such support interaction had taken place. Others noticed small inconsistencies, such as unfamiliar account details or unusual instructions that did not match standard procedures. Authorities like the OAIC issued warnings about these exact patterns in fake support scams. By the time the situation was confirmed, funds had already been moved through multiple channels. Recovery efforts were often limited due to the speed and layering of transactions. What initially appeared to be a resolved support issue quickly unraveled into a structured system designed to move money out of accounts. The scam was typically uncovered after victims reported the incident to banks, regulators, or law enforcement following unexpected account activity. Across countries, reports showed consistent patterns: fake support numbers, scripted calls, and guided bank transfers. Agencies like the OAIC, FCA, and FTC identified these as coordinated support impersonation scams. Investigations revealed how scammers used search engine manipulation, paid ads, and cloned websites to capture victims at the moment of need. Call center operations were linked to structured scripts, layered roles, and real-time coordination during calls. Financial tracking showed that transferred funds were quickly routed through multiple accounts and jurisdictions. Banks introduced stronger warnings and transaction verification prompts as a response to these findings. Despite these measures, new variations of fake support listings continued to appear across platforms. What appeared to be individual support calls was ultimately identified as a repeatable system designed to convert trust into immediate financial transfers. What made this scam effective was the timing. It intercepted people at the exact moment they were looking for help. Victims were not acting carelessly. They were following what appeared to be legitimate support guidance. The system mirrored real customer service processes, using structured steps and technical language to remove suspicion. Because the interaction felt official, financial actions were seen as part of resolving the issue rather than creating risk. Investigations showed that the same structure was reused globally, with only the brand and entry point changing. This allowed the scam to scale across industries, including banking, travel, and software services. The financial impact occurred within a single call, leaving little time for verification. For many victims, the loss came from following instructions that appeared completely normal at the time. The pattern remains active today, evolving with new platforms, but relying on the same core mechanism of turning support into financial loss.